Hello, I'm Peter Towers, Managing Director and Founder of ESS BIZTOOLS. Welcome to the ESS BIZTOOLS Accountants Minute podcast. I hope you're having a wonderful day. The theme for this particular podcast is Go Beyond Compliance, Transform Reports into Revenue. This is a very important subject because this goes beyond the service that has become traditional for many accountancy firms and what many SMEs believe is the totality of the services that they can receive from their accountants, which is the preparation of an annual set of accounts and an income tax return. But there's a lot more to running a business than having a report which gives an annual set of accounts and an income tax return. How would you evaluate that part of the services that you supply? And I'm not trying to be overcritical because I was a partner in an accountancy firm and my colleagues and I prepared a lot of annual set of accounts and tax returns. But I'd been involved as a chief financial officer and company secretary of a listed public company. And I had a working knowledge of how the big end of town run their businesses. And I wanted to implement that. And I found a great ally in the Financial Management Research Centre, which had been established at the University of New England in Armidale, New South Wales, because they had a mandate that had been signed off with the Institute of Chartered Accountants and the Australian Society of Accountants, now known as the CPAs. In 1982, that was established. And here we are all those years later in 2025, and still the debate is what additional services should accountants provide to help SMEs? Well, I'm going to share some of them with you today. And these are all beyond annual accounts and tax returns, because that information does not help your clients survive. And the data speaks for itself. The Small Business Ombudsman releases reports every couple of months. And in his most recent report, he's highlighted that over 50% of the small businesses in Australia, the proprietors, are not earning the basic wage. What more can we as accountants do to assist SMEs? I think that's an important question, and I'd really like you to think about it. I think our profession owes a greater degree of concern about what is happening to SMEs around Australia. I know some are succeeding, and that's great. And some of them are clients of subscribers to ESS BIZTOOLS, and that's great also. But there's a lot of businesses not performing well. And we seem to have different decisions being made in Canberra these days, which don't really highlight that SMEs are a high priority from the government. I think our SME clients need us in there fighting and working for them. And sure, you'll charge and I'll charge, and as a profession, accountants should be able to earn their fees from the supply of these services. So some of you have expressed to me a bit of concern about what the former tax commissioner, Chris Jordan, had to say nearly 3 years ago about significant changes, and they're occurring, I'm told. And that's going to cause some issues. And we also have the warning from a fellow accountant about 12 weeks ago in a podcast on the introduction of AI into accountancy firms, when he indicated that based on his knowledge of AI, and he's now a senior consultant to GPT, that compliance work as we now know it will not exist by the end of this decade, 5 years away. There's a lot of changes occurring. And we're the lucky profession, aren't we? Because with these changes occurring, there's a whole group of clients that are looking for services. And I think we should be using the technology. Just as Chris Jordan, the former tax commissioner, said, it's the technology and the software that's making it possible for the tax office to encourage wage earners, salary earners, and small businesses and businesses generally to communicate directly to the tax office, bypassing accountants. We can use that same technology, the improvements that have occurred, not only just in AI, but in all other aspects, to supply a virtual service to our SME clients. Because I think we should be making a clear statement that every business needs regular accounting input. And by regular, I'm saying weekly, monthly, and in some cases daily. In fact, setting up a daily system I see as part of the brief, setting up a weekly performance and profitability report process for every business operation by your clients is essential to give them guidance as to what was the financial result of last week's activities, and trying to ensure that that information is available by a Tuesday. I think we've got to turn Tuesdays into a great information day for SMEs all around Australia and New Zealand, so that our clients have got real information. And then, as part of the deal, you have made your services available to your client to discuss those results. Because that's the big difference for what happens in most SMEs, not all, but most SMEs, as compared to what happens in larger corporations. Because the larger corporation has an employed full-time accountant or chief financial officer. Many of them have got quite a number of them, of course, who are able to assist the leadership team to answer their questions, to answer the CEO's questions, what I used to call the what-if questions, which in some cases could start as early as 3 a.m. in the morning when the boss had an idea. He's getting ready to catch a plane somewhere and would ring. There was a brief apology, it didn't last long. Can you have a look at this, please? I'm going to be in Melbourne in a few hours. I should have asked you this yesterday, but can you give me this update so I can be informed in my negotiations with the people I'm going to meet? I think SMEs have these same sorts of issues, problems that affect them in their day-to-day business operations. Who do they ring? I don't think they ring a solicitor about those types of matters. They may have a family friend they can ring who hopefully had some experience in running businesses. But the obvious group is the accountancy profession. And we need to guard that and make sure that we're delivering. Otherwise, there will be an emergence of another group of people who will try to supply those services because the opportunities are there. Please think about it. Go beyond compliance. Transform reports into revenue. I think this is very important. And it starts with business health checks, not a process that's normally undertaken in a business. When you set up a chart to record, and it can be just done on a typical spreadsheet you can buy from stationery stores, or you can do it in your computers and there's software around. But the key is to import the data, because if there's a problem, it stands out like the proverbial then. It just glares at you. If the gross profit percentage was expected to be 38% and it only come in at 22%, 38 with the 22 written alongside it stands out. Someone's got to look at it and say, what caused that? It could be a mathematical error. It could be that the stock take wasn't done correctly. It could be fraud. But the key thing is it requires an investigation and an answer. What caused that problem? And let's fix it now. Don't let it stay in the system, because that could have been a calculation error. And your client has traded for that week, or the individual productivity of team members may have been budgeted at 85%, but it only came in at 65%, and it's not picked up, it's not noticed. So your client's thinking that based on a calculation of charge out rates, and we've got them in ESS BIZTOOls, that they're going to achieve their profit target. But unless there's monitoring back to say your target was an 85% productivity for that group of team members, and you've only achieved 65%, there needs to be an urgent review. What caused it? Is it a permanent change? And that can happen. The 85% may have been proved to have been incorrect, to have been used in the first place in the calculation of a charge out rate. And if so, it can be corrected now. Sure, you can't go back and change quotes that have already gone in or contracts that have already started. That's bad luck in a business sense. Let's hope we can pick it up somewhere else. But most definitely for quotes and proposals and discussions occurring later today and tomorrow and etc., your client can be using what is now proven to be a more correct charge out rate based on a lower productivity percentage. It's bringing these things to your client's attention that is so important. And this is real accounting work. Real accounting work. Tax returns are important. An annual set of accounts is important. But there are a whole range of other activities that our profession has been trained to deliver that we're not delivering. The mandate that was agreed to in 1982 between the University of New England, when the Financial Management Research Centre was formed, and the Institute and the Australian Society of Accountants, now CPAs, was built around the belief that what I'm talking about would most definitely now be just common sense, second nature. Accountants would do this for our clients. But as a profession, we're not delivering on this. Some firms are. And some of those accountancy firms are our subscribers. And I congratulate your firm if you are doing this already. But I talk to a lot of SMEs, and I know they are not getting this information. So analysing the health check, looking at the average sales, the GP percentages, the waste percentages, the individual productivity percentages achieved. All the source data to do those calculations is available. What it needs to be is to be put into a report so that variations are very easy to spot. And then the questions need to be asked. Within the system, we have a business evaluation workshop to assist you to go through this process, to talk to your clients. And some of the key things we look at here is the financial review, which is analysing the profitability, the key ratios, the financial performance drivers, basically the issues that I just spoke about. But a key report in all this is the weekly performance and profitability report. The performance report's got the KPIs and the business metrics, all that type of information. And then we have the profitability reports. Now, I know some of you might say, well, oh, Pete, how are you going to get that on a weekly basis? Well, you can. You know the turnover. You know the wages. You should be able to quite easily put the wages on cost on top of it. You can read the electricity meters and put in the cost of electricity and gas, etc. And sure, there's going to be some other items that are extractions out of the budget that you bring that into it. And if there's been a special promotion this week, there's been extra advertising, you know the cost of that, factor that into it so that you get this result that can then be conveyed to the managers. Have you ever thought about the employed manager who's running, in the industry I was in, it was butcher shops, a few hundred of them around Australia. And that was a tough gig, starting work at 4 a.m. for 4:30 a.m. of a morning and still being there probably at 5 or 6 p.m. if you're the manager. And the ones that were just running businesses and not getting any feedback, they wouldn't have known what they were doing. But because they got a report each week and got a phone call from their area manager to say it was great, you achieved target, or what went wrong, we're coming around, I'm bringing the accountant with me and we're going to go through it with you. At least there was that input. That's what we need to be going on with our SME clients. The next item you need to look at on an ongoing basis, especially for the problems that SMEs are confronted with, is the cash flow review. Looking at the various contributors to that. What was the estimate of inventory? How come it's $100,000 higher than what we budgeted? Because that's going to affect liquidity. What's the capital expenditure program? Is it overrun? Well, it's going to affect liquidity. What needs then to be done about it? Your role is to guide your clients on financial matters. So if, because of reasons beyond your client's control, inventory has gone up, and it could be because of these disastrous wars going on around the world, where supply chains have been interrupted, if your client's importing raw material or even finished products from overseas countries, it can mean that their inventories had to increase. But has anyone thought through the consequences of that? What's it going to do to cash flow? Where's the money going to be to pay the bills? Because those overseas suppliers will still want to be paid. It's not their fault, they'll say, that it's taking an extra 2 or 3 weeks to get that product to Australia. So your role is to be thinking forward, to be using the current data to advise your clients at what might be the position in 6 months, 12 months' time. Instead of waiting until we get to 5.5 months and suddenly saying, oh, we're going to be $300,000 short in our cash funds by the end of this month. It's a bit late then. It needs to be planned. And it is, in lots of respects, a lot easier these days to help SMEs in that situation. When I started as an accountant, we only had one way to raise capital from the public. That was Section 708, or what is now called Section 708, because I'm going back into the days when this legislation, there was no National Corporations Act. It was all state-based acts. But they had an equivalent of Section 708 of the Corporations Act. You could raise up to $2 million from a maximum of 20 investors. You couldn't promote. They virtually had to be people who were your relatives or you went to kindergarten with and then to high school and university with. So you were very closely linked. You couldn't promote it. Well, today we've got crowdsourced funding, equity raising and early stage innovation companies. We've got a whole group of business angels around Australia who you can communicate with. Your clients, though, in the main, need assistance. They need prompting. They need you really pointing out to them that this is going to be a problem. And this is one of the opportunities. Plus, we now have about 130 or 140 banks in Australia. And some of them are very well organised, and some of them don't really require security, other than personal guarantees, of course. But it's the forward planning that's important. None of these people, like someone rushing into them on the internet or into their offices and saying, we need an extra 300,000 and we need it in 10 days. It's not the way to do business. What about the market and customer reviews? Big businesses continually look at what's going on in their markets. They're gauging it every day. They get phone calls or maybe emails these days from their people in the field. I was involved in a major meat industry company. We had livestock buyers all over the eastern states of Australia. Every night, the livestock director would be receiving reports from 20 or 30 people. I don't know how he did it. Must have been up quite late of a night getting the reports on what happened in the markets that day. because it was a very fluid situation. Things were changing. This also happens with SMEs. It's not only big companies doing these things. So where is the role that you're playing to help your clients through these operations? In our material, we have a very interesting product which we call Survival in Difficult Times. I first wrote that as a product package about 10, maybe 15 years ago. And I think from memory, it was to do with a situation in Western Australia. There'd been a cyclone come through and it caused a lot of damage. And someone rang me and said, one of our subscribers said, Peter, what do we say to our clients? How do we help them get back on their feet? So I wrote a product package. We put it into place and we added to it over the time. And then, of course, I realised that, geez, in Australia, there's survival issues every year. We've got cyclones, we've got bushfires, we've got floods, we've got earthquakes, and we've got problems where a major corporation fails or closes down, and the ripple effects on SMEs in the community can be quite devastating. So the product package is, which we call Survival in Difficult Times SME Workbook, enables you to work through with your clients. You can send them a link to the product and they can start filling it in themselves. And it's cross-linked to various articles that we have written. I think there's about 40 articles that's referenced out of this product to try to set the scene for your clients, to give some of the services that you would be bound to give if you were the employed accountant working in that business. And then you can follow it up and have a conversation with them. So within ESS BizTools, I've tried to replicate the experience that I had in a fast-moving large company. But the company ran itself as a series of small businesses by making sure that there was effective controls put in place, that there was information being conveyed to the key people, the management people, daily. On a weekly basis, we have the weekly performance and profitability reports for hundreds of business operations, including major meatworks, so that the person responsible could sit down and look at the results, so that the CEO could analyse the performance and hopefully sleep a little bit better at night. Because there's nothing worse than not knowing the results, even when the results were bad. I can remember him saying to me on one occasion, I need to know the good and the bad. We're in a seasonal industry, things change, I know that, but it's when I don't know, because the problem could have been a lot worse. Please think about it from your SME client's point of view. We've got an interesting checklist. How well do you know your business? It's a checklist that you as the accountant or the bookkeeper could sit down with your clients and just go through with them and analyse various aspects. And it will help you and it will help your team to have a greater appreciation of the challenges that are confronting that client. In our material, we've got work programs that we've determined. You can use them or not use them, but they're there because it's part of the discipline that encourages your team members to be inserting what they've done on various projects so that you can keep your eyes on them. And all this is then embedded in what we're calling the 52-week Business Enhancement System. Daily. The daily is a one-page report to the leadership team. It might have the bank balance, the debtors amount outstanding, bills to be paid this week, what happened yesterday, what was the value of sales, the number of customers, the average sale, the gross profit percentage, or whatever are the appropriate terminologies in that business. That's just a reminder of what's going on that might not be obvious to the person that is in the leadership team, but are not there looking at those figures every moment of the day. That's a report, just a flash, one page. But it needs the rhythm of meetings. Rhythm of meetings really works in with the 52-week Business Enhancement System. So on a daily basis, the leadership team might have had a 5 to 10 minute meeting. And for those who can't attend, get them to come on the phone call, Zoom in. And then we got the weekly. Well, the weekly performance reports, I think, are the vital document, the performance and profitability estimate report. The leadership team, I think you should be encouraging your clients to sit down. They can have Zoom meetings. You can come in on a Zoom meeting and discuss the results. And the key thing to say is we achieved targets. Now, whether the targets have been achieved or not, I think there should be this format within the rhythm of meetings that those meetings are held so that if there's any issue at all, it can be debated and discussed and fixed if there's a problem. And that's the big benefit out of all this, fixing it. And then on the monthly basis, the monthly financial accounts for each operation, comparison to budget, and then a very important confirmation that the monthly results have confirmed what the weekly profitability reports have been indicating. You know, as a young chief financial officer, company secretary, as I walked into the public company boardroom in our office, which was in Sydney, with the CEO, he would just quietly say to me, how did the monthlies go, Pete? Did they reconcile with the weeklies? Now, I'd already submitted all the reports to him, but he was relying on me to assure him that the weekly results had been proven to be accurate because that's what he was running the company with, the weekly performance reports. The monthly financial accounts were too late for him to be making day-to-day decisions with his area managers around Australia. The monthly reports were too late. You can imagine what his reaction would have been if all he was getting was an annual report, an annual set of accounts. Now, ultimately, he got that, of course, because we were a public company, so that's what was getting reported to our shareholders and to the stock exchange. But the market expected public companies to be doing all the sort of process I'm doing. And with today's technology, today's communications, I think there's a responsibility for us as accountants to ensure that we are delivering as close as possible to that by implementing virtual services. Call yourselves an accountant or a virtual bookkeeper or a virtual chief financial officer, whatever you're comfortable with. But it is vitally important to help the survival of SMEs as a wide community. 2 million firms in Australia. And I suspect that at least 1.5 million of them really need our assistance as accountants. So thank you very much for joining us for this overview in this podcast. If you've got any questions, please don't hesitate to send me an email, peter@essbiztools.com.au, or you make a phone call to me, 0418 190 181. And please visit our website, www.essbiztools.com.au. We would love to hear from you, and good luck with servicing your SME clients. Stay safe. Have a great day. Goodbye.